Bitcoin has dropped by 3.4% in the last few hours in a dramatic move on the 1 hour time frame. And this is in line with our expectations and following along with yesterday's technical analysis. In today's video, we're going to be jumping down into the 1 hour, 1 day, and potentially 1 week time frame, sharing my thoughts and opinions as to where I think the price action is heading. As I get into today's video, smash that like button if you're new, subscribe, and let's jump right into the charts here for Bitcoin, I should say. So here we are with Bitcoin paired up with USDT. We're on the 1 hour Binance chart, and this is what I'm referring to right here. So we were talking about yesterday another additional retest of the $60,198 to $60,837 range. We were hoping for maybe a bit more of a push to the slightly higher range of there. But we did set a new higher high here on the daily, on the hourly time frame, and this was basically getting flagged up as an equal high, basically immense resistance right up in this range, kind of as expected. As I was talking about yesterday, this would have been a phenomenal place to start thinking about this rejection and the potential for a short on the market. Here, this candle right on the 1300 hours yesterday would have been the kind of point to go short, stop loss higher than the previous swing high, and we would target out some good areas of support. I personally would have been looking at this range right around here, which would have been about $58,670. Risk reward ratio would have been 2.04, and that trade would have completed beautifully. Would have been a fantastic leverage based trade. And of course, if I had taken this one, I would have been taking it on BitGet or Bluefin, which are my go-to platforms for leverage based trades. Links in the description below for exclusive and fantastic bonuses and discounts available for new users. So if you haven't got an account there, go ahead and check it out. Click the links in the description below. So yeah, this move to the downside is looking very interesting. Even Equilibrium couldn't hold it as support on this 1 hour time frame. Pure rejection from our 200 EMA, 50 EMA, 50 SMA, and a death cross is now looming here on the 1 hour time frame. Now, this particular move to the downside is interesting because we do have this measurement, and this is a very clear impulsive break to the downside. This means that we should be expecting an additional move, and you can kind of see it here with Equilibrium being resistance. We should be expecting a final fifth wave move to the downside. This I am targeting a little bit deeper in the price action, where we're looking to find support all around this previous area at 57,870 to a slightly higher range of 58,080. That's this area just here. So I don't think we're necessarily done just yet, although any potential rally higher than the previous swing high coming in at 59,377 is going to be the area where we think we're likely to see this this break for structure, basically preventing us from slipping down a little bit further. Once we finish this little move to the downside, we are going to be looking for a bounce, and that bounce is also going to be met with an additional move to the downside at a later date. So we're not done yet. There's a lot more volatility to be expected here when it comes to BTC, and that is a huge opportunity for leverage-based trading or swing trading in the market. Okay, a lot of liquidity has been extracted. This has been the common message that I've been talking about for a very long time at this point. But for the most part, there's huge opportunity in this as well as great risk. Okay, so it's important that we reflect on everything that's going on with the price action and what this might mean going further forward for BTC. So let's take a look. What else is here on the hourly chart? Well, we have our stochastic RSIs also showing some interesting momentum shifts. We can see there is a clear downward trend on the stochastic RSI. So we are looking to kind of continue this into these lower ranges, but coil up before we get to that big break to the upside, that relief rally. But I don't think it's happening just yet. So more volatility to be expected there. Our relative strength index is also bounced from that low level in heading back towards oversold. So we are not there yet, indicating that things are still bearish from this point of view as well. Okay, so lots still to play for on the 1 hour time frame. Expect moves to the downside, bounces to the upside, further moves to the downside. Basically, we are not finished with this correction just yet. So let's go ahead and roll this up into a daily time frame. Does this change any of our daily analysis? No, because I've been talking about this for quite some time. We are, of course, still looking for that retest of $68,000 to $70,000 on the daily daily time frame, but we're not yet ready for it. I've been talking about this for the last few videos here, where we are still looking at this coiling to the downside. I am still looking at this move to come on down a little bit deeper. We are not finished. As I kind of spoke about previously, we are still looking for a bigger push to the downside to finish off this descending wedge before we get those breakouts, where we are going to be targeting out some of these upper areas of resistance. 65k is a very interesting area, so there's going to be some interesting volatility to be seen right inside this little pocket right here, and I'm going to go ahead and draw it right in, put it across, so you can see this is an interesting pocket between 65,044 and 66,128, and of course we have those higher range expectations of trying to kind of push up just a fraction further towards $70,000, but we are not ready for it yet. So expect more kind of consolidation, more kind of volatility in the market, and a lot more liquidity being extracted, because that's ultimately what is going on. We are seeing pumps and we're seeing dumps and we're seeing a lot of money being removed from the market as a result. Now, that's not necessarily a bad thing, but it is something to be very aware of in a market that is incredibly illiquid at the moment. There's not a lot of demand out there for Bitcoin and for the wider crypto market. So liquidity is quite an important thing, although it is quite common practice to see it being extracted from the market through these means. This is something that exchanges, market makers, whales do on a day-by-day basis, along with traders who use liquidity hunting tools. So this isn't unusual. It's kind of part of being in the crypto space, and we're going to see more of it. I don't think we're ready to kind of see any kind of conclusion to that. So let's come back down into the charts and take a look at this through maybe a slightly different lens. If we zoom out, it's important to reflect on where we actually sit, because the chart is bullish on a macro scale. There's a lot of volatility happening on the smaller time frames. There's a lot of people kind of worried about, you know, the Bitcoin bull market coming to an end a little bit early. And of course, I do want to kind of stress it would be the absolute shittest, and I'm sorry for swearing on a crypto family-friendly show, I should say, but it would be the absolute worst bull market in Bitcoin history, 375%. Okay, it was unrealistically poor performance, and many altcoins really even barely getting started. So we know that it's not likely, but this is something that we've seen. So it's not likely to be an end to the bull market. And this is something that we see time and time again. This particular move of what we've seen since 2023 into 2024 just reminds me of 2019 into 2020. Okay, so everything that we saw over here and everyone believing that that was it, that was the bull market over and we're done, we're going down now. And all those same fears that are being kind of regurgitated right now is exactly what we saw back here in 2019 and 2020. Okay, before, of course, that fantastic surge to the upside. That, I think, is where we are on a much, much bigger scale, because we have spot ETFs, we have artificial intelligence, we have the world of real world assets being tokenized. We have so many more things now than we had before. And this is just everything kind of building into one hell of a bullish market to come in 2025, which I've been through many times before. So although there's a lot of volatility, that in itself is huge trading opportunities. For those who are just dollar cost averaging and building out their positions, there really isn't a lot to be worried about, at least not in my opinion. Ultimately, the market will continue to do what the market does best and see these big swings and volatility in the market, and money will change hands. Lots of people will be wrecked, specifically on the retail side, and a lot of money will be made over on the whale side, the market maker side, and of course on the exchange side, because this is a sum zero game. Okay, someone's buying and someone is selling. There's fees to be paid, sure, but there's always sum zero. It's buyers versus sellers, or sellers versus buyers. Okay, and it's a case of who's buying those coins at the higher prices and who's buying them at the cheaper prices, vice versa when it comes to selling. So understanding how this market works is crucial. Understanding that all of what you see in the charts right now are part and part of being in the crypto space as early as we are. You guys can let me know what your thoughts are on all of this in the comments down below. Do you agree? Do you disagree? What is your price predictions for Bitcoin over the next couple of months? Let me know in the comments below, or join us in our free Discord server. And if you haven't done so yet, check out my other channel where I'd go through the Cardano technical analysis.